We have Karthik Kumar joining us, fund manager at Axis Mutual Fund. Karthik, good morning. Great to have you with us here on the program. Thank you for joining us. I think the simple question people want to know is, are we there yet? Even if the market does not recover quickly, is the bulk of the fall done? So let's start there, Karthik. What do you think?
If I were to hazard a guess, I would say we were probably there yet. We are probably there. But what's happened over the last couple of months is essentially, given the macro uncertainty, given policy uncertainty, and especially the transition in the US, essentially people and the market participants have questioned growth, which is why if you look at our own markets, growth stories have suffered the most. And especially growth stories where we've seen decent outperformance over the last year, or where, in other words, where momentum has been reasonably strong. That combination of stocks, or those baskets of stocks, have seen the most pain in relative terms. And in fact, what's kind of held up is are areas where there is deep value, or in other words, areas where there has been institutional interest has been not as high. Those areas have kind of held up well, and obviously large caps doing better than the breadth of the markets.
Okay, by the way, I'm trying to just find more positives here. A couple of other stocks on the auto radar that we've not discussed that are doing well. SML Isuzu's sales were very good as well, about 27% growth. That stock's flying away this morning, about 6% higher. Escort's Kubota, again, total sales were up about 11%. Some of the farm equipment makers have done well, 2% up on that. And of course, SML is up about 6% as well. So that's one pocket of green. By the way, the mid-cap index is already red. The bank nifty is already red. So it's really shaky ground that we seem to be on. Let's see. It's still early. That's the decline. But maybe this is one of those days where we have several waves after the kind of damage that we've seen in stock prices last week. Let's, get some more perspective. So then, Kumar, what is the sense? Let's talk about how to start buying in a market like this, where you don't know whether this is the bottom or if it's coming 1 week later or 10 days later or a month later. Apart from the obvious, and we've heard this, I think all our viewers know that I think there's a near consensus on buying large banks. Would you agree with that consensus? And beyond that, how do you start nibbling in a market where you don't know whether this is indeed the end of the tunnel?
I would agree to some extent on the banks being a bit more selective there, but I would agree there. But aside from that, one way to look at growth stories where growth is likely to be much more, there is much more growth visibility in the near term over the year or next couple of years. And if the valuations do get attractive with some of these growth stories, then I think they can be good entry points from a stock or a sector perspective.
So can you just name some of these pockets where now there is reasonable visibility on growth and valuations are also looking more sane? Some ideas?
So in terms of my own positioning, I continue to be overweight pharma and healthcare in general. I still continue to be overweight selective stories and consumer discretionary, while I continue to be underweight staples. And staples is largely a bottom-up decision rather than a top-down. And then commodities as well are sectors where I don't see much comfort there. So that's again an area where I continue to remain underweight.
All right. Hi, Karthik. Good morning and good to see you. And Karthik, this big debate about large versus small caps and mid caps. There was a lot of froth out there. Some of those stocks have pulled back a great deal. What would your allocation be right now, between the two?
Again, that comes down to the kind of schemes that we are managing. It will be different for different areas, but I largely agree with you that mid and large small caps have corrected. And in fact, even within the mid and large caps, mid and small caps, the correction has not differentiated much between whether you're looking at growth stocks or whether the stocks have growth visibility or not. So I think there are pockets that can be interesting there.
Right. Got it. Karthik, just a quick word on the IT services space, if you have a view. We saw very sharp falls last week, and it kind of caught up with the rest of the sectors. So it had fallen the least, but it's down. The index now, as of Friday's close, is up some 18% off its highs. What's the outlook there?
I'm on par or slightly higher than the markets in terms of the benchmark in terms of IT. Again, typically in markets like these where volatility is higher, rupee is kind of on the weaker side. IT tends to kind of hold up well over a reasonably longer span of period. So I'm hoping that that kind of trend comes back, and that the correction that we saw the other day was much more in keeping with what was happening globally rather than what is much more specific to our own sector.
Okay, all right. Karthik, on ground, the kind of feedback you're getting is with regard to, say, cement consumption. We had the core sector data that came in on Friday, and for January, it was up close to around 14%. We've seen in the past that maybe in the following month, it could swing by another percent. So maybe it'll be 13% or 15%. But cement demand has improved. And now you have the input costs that are cooling off as well. We know that the government, to hit their capital expenditure target, February as well as March will see the heavy lifting in terms of the capex spend. How do you approach something like that? Because that has nothing to do with regard to Trump, with regard to tariffs, with regard to China. It's a pure play on the domestic India story. So your take, how would you play this theme?
So the way I would look at it is essentially the growth numbers sequentially have been good, and some of the indicators that you've pointed out have been quite strong as well. And given the expectations of an uptick in government spend as well, I would precisely look at areas where the stocks or the sectors have been beaten down, and as I said, where growth visibility continues to be strong. I think there are pockets in there which have gotten which have corrected disproportionately higher, slightly compared to where markets have fallen. I think that presents a good opportunity as well.
Okay. Kumar, in the beaten down areas, which were the erstwhile leaders of the rally, whether it's capex, defense, railways, industrials overall, do you find reasonable growth plus valuations, that combo anywhere in any of these sectors?
I think some of the selective names in capex do present you that opportunity. That's an area worth looking into. And otherwise, even within, let's say, selective stocks in pharma have corrected a bit, and that's something else that I'd look at.
All right, we'll leave it there. Karthik, thank you very much for joining us. Good conversation, and appreciate you sort of coming on here on CNBC TV18.